The National Retail Federation had predicted that the amount spent should have approached $1 trillion, and instead it looks like it's in the $900 billion range. That includes not only the stuff you buy, but also, eating out and what you spend on groceries as well. Give us a sense of, missing that mark and why that would be.
Well, I think that the biggest factors are just that consumer confidence. This has been one of the quandaries, I think, that has really perplexed economists and, kind of just observers and certainly retailers for the last year, which is that even though a lot of the key economic indicators like unemployment rates and wages are relatively strong, consumer confidence continues to be pretty weak. And the shopper is not really spending above that inflation number. I think part of it could be that the consumer spent so much more over the last few years. They're finally done with all of the excess savings that happened during the pandemic. You have other economic factors, like in the case of students, that perhaps some of their anything that is left over and discretionary is now going to loan repayment. So there are a number of factors that could be driving consumer issues. And the retailer sales, candidly, were not great this year either. It was pretty mediocre from a qualitative standpoint. There wasn't as much from a store offer standpoint. There wasn't even as much from an online free shipping standpoint.
We talked yesterday on Squawk Box about the fact that some retailers are instituting fees for returning items now. If Americans are returning 15% of the gifts that they get for the holidays here, how much do those returns eat into the bottom line of these big retailers?
Well, returns are definitely a cost center. There are some retailers that do try to turn those returns into exchanges, or they try to somehow preserve that revenue. But it is generally perceived as a cost center. It's absolutely, and that 15% number is a conservative one. I mean, that's the store return rate for your average physical goods retailer. When you're looking at online, that number can be anywhere from 25 to 50%, depending on the retailers that we're talking about. And it's a huge, huge cost. There's a lot of technology now that's going in to try to optimize return rates. There's also pretty well-known stat that, a minority of shoppers contribute to a majority of returns. And if there's a way to try to make the experience, kind of more challenging for some of those heavy serial returners is what they're called in the industry. That is actually something that could improve your overall profitability.
Going into 2024, then, what are the retailers that you think have an opportunity for profit here? Where should investors be looking?
Yeah, there are some of the big names that we have been familiar with for a long time that have been capturing more and more share. Walmart and Amazon are two that continue to outpace the industry. They're outpacing inflation. In the apparel sector, companies like Lululemon do particularly well and have been doing well, also have been outpacing their peers in the sector and continue to have a lot of energy with the shopper. Where I would be a little cautious is in the electronics sector at the moment. And that means potentially companies like Apple, which have had some softer quarters recently. Now, that doesn't mean that it won't recover and its innovation won't support it through 2024. But absolutely, the electronics sector has been adversely impacted by
if they can't sell their highest end watch, and in fact, they told the government that it would be material, you can see that that's a problem. Sucharita, thank you.